AP. Aboitiz Power Corporation. Aboitiz holding firm reports 9% drop in 2022 profit following reduced ownership in power unit. Aboitiz Equity Ventures (AEV), the holding company of the Aboitiz clan, finished 2022 with lower earnings following a reduction in its stake in Aboitiz Power Corp. From 77% to 52%. In a regulatory filing, AEV said earnings declined by 9% to P24.8 billion last year. AEV's lower stake in Aboitiz Power led to a decline of 11% in the power company's income contribution to AEV, which went from P16 billion in 2021 to P14.3 billion last year. If AEV had retained its previous ownership in Aboitiz Power, its normalized core net income for 2022 would have been 5% higher than last year. Power contributed the bulk of AEV's total income, accounting for 62% of its strategic business units' contributions, while financial services made up 27%. Meanwhile, Union Bank's income contribution to AEV remained flat at P6.3 billion. Unfortunately, AEV's profitability for the fourth quarter of 2022 also took a hit due to non-recurring losses attributed to foreign exchange. The holding firm's net income for the October to December period plummeted by 55% year-on-year to P3.5 billion. Sabin Aboitiz, the CEO and president of the Aboitiz Group, said the company's focus remains on strategic innovation and talent development, as they continue to shape the organization and culture of the techlomerate. Megaworld Corporation. Living simply, building big, the Saavedra way. Megawide founder, chairman and CEO Ed Saavedra is proof that success doesn't have to come with a flashy lifestyle. In a world where flaunting wealth is often seen as a badge of honor, Saavedra chooses to keep things simple and practical. Despite his wealth, Saavedra doesn't feel the need to splurge on designer clothes or expensive watches. Instead, he opts for nice but reasonable pieces that reflect his understated style. When it comes to his home, Saavedra believes that less is more. He grew up with the principle of simplicity, and he applies this to his own living space. I grew up kasi with my parents na simple lang ang buhay naman. Sabi ko na sa wife ko, young home kasi it has to be imperfect. Meaning, it has to be a little bit kalang kasi if everything is so perfect magiging parang mansion. I don't feel kasi staying in a mansion as a home, Saavedra said in an interview with Usapang Bilyonario with Soaring loan. Rather than a sprawling mansion, Saavedra's home is just the right size, with imperfections that make it feel more like a home than a showpiece. For Saavedra, the benefits of a smaller home go beyond aesthetics. He believes that a smaller space fosters closer family dynamics, as everyone is forced to be in close proximity. It's a philosophy that runs counter to the trend of big, sprawling homes that can create distance between family members. The tendency kasi, the dynamics of the family will change. May distance, kasi your kids will be staying in one room, one area. A divided na ko ing walls pero kung malit lang, you can just see them and call their names. Sigawan mo lang sila, hoy what are you doing there? He said. In a world that often equates success with excess, Edgar Saavedra is a refreshing reminder that there's more to life than material possessions. AC. Ayala Corporation. Building in progress. Fernando Zobel inspects AC Health's cancer hospital. Billionario Fernando Zobel de Ayala is slowly but surely taking more public roles within the family conglomerate after resigning in 2022 for health reasons. The Ayala Corp. Heir donned a hard hat as he inspected the construction site for AC Health's Healthway Cancer Care Hospital, the first medical facility specializing in cancer in the country. The building is 75% complete and is on track for completion between July-September 2023. The progress of this facility clearly shows the Ayala Group's vision to build the country's first dedicated cancer specialty hospital. Soon, Hundreds of Filipino cancer patients will have access to high-quality but affordable cancer care, the billionaire said after inspecting the premises. Zobel de Ayala took time off from his corporate responsibilities in August last year, initially through a month-long medical leave, followed by his resignation as group president and CEO in September. He reported his return to Manila in November after seeking professional care abroad. DMC. DMCI Holdings, Inc. Strong commodity and electricity markets propel Consunji-led DMCI Holdings to record profit in 2022. DMCI Holdings, Inc., the diversified engineering conglomerate led by billionaire Isidro Consunji, reported an all-time high consolidated net income of P31.1 billion last year, up 69% from 2021. The surge in profits was attributed to higher contributions from all of its subsidiaries, which led to record-breaking results for the company. The bullish commodity and electricity markets were also cited as a significant boost for DMCI Holdings. Consolidated revenues climbed by 32% to P142.6 billion, largely driven by higher coal and electricity prices. However, excluding non-recurring gains and losses, the core net income accelerated by 80% to P31.2 billion, another record high for the company. Consunji, chairman and president of DMCI Holdings, said that while 2022 was a very good year for the company, they expect the markets to soften in 2023. As a result, their strategy is centered around increasing volumes and optimizing cost management to maintain healthy margins. In the fourth quarter of 2022, however, DMCI Holdings reported a 30% drop in net income to P3.5 billion, due to the combined effect of higher stripping costs and fuel expenses, income tax expense, and fewer real estate accounts that qualified for revenue recognition. Semirara Mining and Power Corp. More than doubled its contribution, from P9.2 billion to P22.7 billion, due to all-time high domestic coal shipments, higher spot electricity sales, and elevated market prices. DMCI Homes core earnings increased by 2% to P4.5 billion, while Maynilad's net income contribution declined by 6% to P1.4 billion. DMCI Mining's contribution improved by 7% to P1.3 billion, while DMCI Power delivered a 28% growth in contribution to P742 million. Construction Unit DM. Consunji's contribution rebounded by 55% to P587 million following the completion of building and infrastructure projects. PNX. Phoenix Petroleum Philippines, Inc. Crisis mode. Dennis Uy promises to pay Phoenix's P132M dividends in March or April, mulls debt restructuring. Phoenix Petroleum of Duterte crony Dennis Uy has assured the Philippine Stock Exchange that intends to pay its dividends in due time. In a letter to the PSE, PNX said it is working together with its parent, Udena, to ensure that these dividends be met within this month or next. Last December, PNX put on hold the issuance of P132 million cash dividends, P18.92 per share, due to investors of its Series 4 preferred shares PNX4. PNX4, which was sold by Uy in 2019 at P1000 per share, closed at P292.80 on March 7. PNX said it was focused on finalizing a liability management exercise (LME), which could involve buybacks, tender offers, exchange offers, and consent solicitations to change the terms of the bonds, as it struggles with cash problems amid rising debt and operating expenses. To address its cash problems, PNX is considering hiring a financial advisor to help the company boost its working capital, increase inventory, and revive sales. The company's losses ballooned to P948 million in the third quarter of 2022, while its debts payable within 12 months surged by 12% year-on-year to P44.9 billion as of end September 2022. At Atlas Consolidated Mining and Development Corp. Earnings of Sy-Ramos mining joint venture hampered by soaring fuel prices. Unprecedented spikes in fuel and energy prices coupled with heavy rainfall dampened earnings of Atlas Consolidated Mining and Development Corp. in 2022. In a regulatory filing, Atlas Mining said its profit fell 17% to P3.2 billion as the surge in fuel and energy prices resulted in higher operating and production costs. Significant heavy rainfall volumes experienced by Atlas Mining's wholly owned operating mine, Carmen Copper Corp., resulted in lower production levels. EBITDA also declined 45% to P5.4 billion. Atlas Mining registered P17.68 billion in revenues, 4% lower than the prior year. Copper metal stood at $4.02 per pound last year, 6% lower than the previous year's $4.26 per pound. Gold price, however, increased from $1,802 per ounce from $1,804 per ounce. ICT. CTSI net income up 44%. Logistics giant International Container Terminal Services Inc. ICTSI improved its profitability in 2022, taking advantage of the lifting of border limits worldwide to boost trade facilitation. ICTSI yesterday reported that its net income jumped by 44% to $618.47 million last year from $428.57 million in 2021, as the growth of its revenue outpaced the rise in its expenditures. Broken down, revenues increased by 20% to $2.24 billion, while expenses went up by 13% to $1.27 billion. Further, ICTSI saw its cargo handling grow by 9% to 12.22 million TEUs from 11.16 million TEUs, attributed to consolidation of Manila North Harbor Port Inc. The firm also benefited from the recovery of trade with pandemic restrictions loosened for the most part of 2022. For last year, ICTSI reported that its capital expenditures amounted to $386.35 million. The bulk of the spending went to projects expanding the Manila International Container Terminal, as well as facilities in Australia, Democratic Republic of Congo and Mexico. Likewise, ICTSI spent for the purchase of land at the Port of Manila and for the extension of its concession at the Madagascar International Container Terminal Services Limited. For this year, ICTSI has allotted a budget of $400 million for its capital expenditures, mostly for the expansion of its operations both here and abroad to prepare its facilities for the projected spike in cargo footprint. In particular, the Razon-led firm plans to expand the yard capacity of International Container Terminal Services Nigeria Inc. and bolster the key operations of ICTSI Rio, Brazil. It has its eyes set as well on developing the new terminal it acquired in Indonesia in 2022. ICTSI Chairman and President Enrique Razon Jr. said the firm managed to enhance its financials in 2022 through volume growth, coupled with spending controls. He vowed that ICTSI would keep its fundamentals intact as the economy faces uncertainties in the pandemic aftermath. In a year marked by geopolitical unrest and inflationary pressures, ICTSI took clear and robust actions to focus on cost initiatives and implemented a selective and disciplined CapEx program, which has pleasingly created value for our stakeholders, Razon said. While the weaker economic backdrop continues, our business fundamentals remain constructive and we remain strongly positioned to deliver sustainable growth, he added.